Desi, g'day, how you doing? Okay guys, so last week we kicked things off starting to talk about building trading systems, trying to give you ideas about sort of fast tracking these things. It's something that's important with trading, but not a lot of people are sort of thinking about, because they're sort of more thinking about why do I keep losing, how do I make money in these markets, not really thinking of the big picture. You need a sort of end-to-end structure. You need a system, you need to think about technicals, fundamentals, how your strategies, little engine room, your tools you're going to use, how you can do your analysis, how you can do your trade planning and execute, and how you're going to handle things psychologically. Is that you, David L? How are you doing, Noda? When are you going to intervene next? Please let us know in advance. And then maybe how you might test. Thank you. Test a few of those things. Okay? Now, we ended last week. We sort of went over this high level, this whole, what is a trading system thing, and then we looked at what goes in our toolbox, and then we looked a little bit on analysis. Okay, so we were talking about also a lot about, with our analysis determining whether we're sort of driving things fundamentally today or technically when we sit down and do our analysis, look at our charts, what's driving these things. Okay. Now, the next step now is to take the analysis and then turn it into a trade plan. Actually turn something, actually make a plan. It's the one thing that this is what got me actually into FX Bootcamp, was when I was a very novice Forex trader trying to make things work. I YouTubed Forex once, and this FX Bootcamp thing came up, and the thing that attracted my attention was this thing called a trade plan. Because it was actually something, after reading a book, that I was actually trying to do and was no good at it. So that's what actually attracted me to FX Bootcamp, and following your analysis, it's a very, very, very important part of your trading. Okay? Out of a lot of the mentoring I've done, last year I was involved in some live training courses over weekends through FX Bootcamp. I remember having one in Los Angeles here, just outside Los Angeles where I live. And by the end of the weekend, most people that were there were pretty good at establishing in their own little world some idea about analysis, i.e. they can pick direction, they can pick areas of support or resistance that they'd be willing to trade from, but actually turning that into a trade plan, the analysis was actually very hard for people. Yes, they can see an uptrend, they can see sideways, things like that, but actually to turn that into, I'm going to buy here and get out there, is actually quite difficult. Okay? By the way, before we get started, if you're sitting down doing your charts, looking at your charts today, based on what we spoke about last week, what would you say is currently driving these currency pairs? Any ideas? What is in control of these currency pairs right now? Definitely fundamentals, isn't it? Fundamentals are driving. These things are just not giving us the pullbacks that they normally would. Check out this Aussie on a 4-hour chart. It is just, things do not normally reverse like this. They reverse usually like this. They'll come up, they'll pull back, there'll be a little hesitation, they'll sort of step their way down like this. This thing has just been, no, we're out of here, dude. Okay? So, remember what we were talking about last week with trading strategies and things like that, and when you do your analysis, you need to determine that, because how this is trading today, you're probably going to have to adjust your trading strategy or have a trading strategy in your system that's going to work to handle these sorts of trades, right? By the way, this thing's going to get volatile in like 25 minutes with the Aussie interest rate decision. 4-hour. Lee. Looks pretty good. It's been riding it since the NFP pretty solidly. Okay, so That's our trading system. Okay, now we went to analysis. Now, remembering what we said last week with analysis and stuff, okay? The best trades are the ones that are set up off the longer term charts. So you're doing all your analysis, just like, for example, Lee, what's that Aussie seem to be doing? Well, that's right in the 4-hour 5. Now, if there wasn't a whole lot of technicals about to come, fundamentals, fresh fundamentals about to come out for that in the next 30 minutes, you might fancy just some continuation off that 4-hour 5 area. You might be trying to have a strategy in your system under very volatile or very fundamental-driven scenarios where you might try and pick up a trade off an Aussie 4-hour 5. If it wasn't about to have fresh fundamentals come out in 25 minutes, which is serious for it. Like if it was, I don't know, if it was their home loan data, you might not be so worried, but it is their interest rate decision, and that might cause the markets, depending on what they say, to, give this thing a bit of a pullback. Okay? So, under normal circumstances, the best trades are ones set up off longer term charts. Okay? And it's all done well in advance. Okay? So, this took a while for me to realize when I was learning to trade what I would call properly was, and it was actually a really good feeling, set up a trade plan after doing analysis and actually had to wait. Like actually sit back and wait for like 2 hours for my trade to actually be executed. And it was one of the big turning moments in my personal trading, because after that, and it was a very successful trade, after that I realized, man, that was good and that's the way it's got to be. And pretty much nearly every trade you've been taking after that, or before that, sorry, you've pretty much probably been chasing price. Instead of saying, oh, longer term chart, get back there, I'm going to long you. Oh, longer term chart, get back there and I'm going to short you. I've pretty much been, looking at charts, oh, get in there, chasing stuff. Now, there's nothing better than when a plan gets together, Joshy. Okay? Now, it's okay to plan off the shorter term time frames once your analysis is completed. By that I mean this, okay? Let's find an example. If you're thinking today, pull back to here, and I'll short this thing, that is perfectly cool. Okay? Be like 50% fib of the drop. Back there, maybe some little confirmation in that 105 or 106 strike level area, and then we might look for some continuation. Is that possible? Very much so. The interest rate decision could take us up there. New York or something could short it. Okay? So once you've decided that's your trade plan for today, I don't mind if you go back to your 15-minute chart and then you maybe fib up that drop and say, okay, where was that area? Oh, here it is, right here. Right where the 382 is through here. If we can pull back to there and give me a change of trend, it's all cool. It's just when you live in these 15-minute charts all the time that I believe it can become a bit of a problem. You're not seeing the sort of forest for the trees, are you? You're sort of in the forest here. It's, the 4-hour chart, when you're doing it, the 4-hour and daily charts, when you're doing analysis, these charts here, highlighting in yellow, they're like the 50,000 foot view looking down what is going on. Very important. Okay? This 15-minute chart and somewhat this hourly chart, the top ones, they're more, you are on top of the trees, right? It's very hard to see the real problem or how far widespread the forest is if you're just skimming the tops of the trees. Many of you live in 1-minute charts and stuff, and you're down at the grassroots. You have no idea where you are. Okay? Plan off the longer term stuff. Go and hover across the treetops when you've established where you are in the 50,000 foot view. and you know the nature of the full scale of where you're at. Okay, so as I said before, if you are not trade planning, if you just sort of sit down, look at your charts and just sort of manufacture a trade with no proper analysis and no thinking about where you are, where it's going, you're not really making a trade plan. You're chasing price. You're just sort of thinking on a hope and a prayer that you're going to get in here and this is going to work. It's a very dangerous approach to trading. Very occasionally, even now, I will chase price. I don't know, it's very rare for me. Let's say once every 3 weeks. I might have had a good winner and I'll just think, oh, this is going to continue, pull back, and I won't actually have looked at the full analysis. I won't have thought things through properly. Essentially, I haven't made a proper trade plan where I've actually said, get back to there, show me an entry, and I'm going to long you. Here's my entry. Here's my stop. That's where it's going. Yeah, nearly every time I do it, it's a loss or a break even. And so, yeah, something that is very dangerous approach if you're chasing price. Hands up in the room who sort of gets a little bit wayward. They'll long something, it goes against them. They'll short it, goes against them. They'll long it. No, I don't, Lee. Yep, you're chasing price, guys. You're not thinking in advance and making a trade plan, sitting back and waiting. Right? Once bitten, twice. Really, Joshua, that's good, because I've been once bitten and I still like that little bite once every... I don't know, it just creeps in a little bit. Okay? Now, well, not once per day. Good God, no. You'll end up losing by the end of the week. So, a trade plan, guys, consists of 3 important things. Okay? Now, if you cannot do these things, you've got no trade plan. Okay, so we need an entry, an approximate entry, right? So you look on your 4-hour chart, and price might be pulling back, and you'll say, get back to that zone and maybe show me a change of trend in that area, and that's going to be my entry. Okay? And then you need an exit. So what you'll be hoping for is once that's entered, that it's going to come down and maybe make some lower lows, tag an area of support like a pivot or a higher level EMA or something. So this is going to be your entry up here. Okay, oh, it's a funny looking E, but that's an entry. And that's an exit. Okay, now most importantly, you have to do something else, and that's calculate risk reward. Okay, now the reason for that is you're making a business decision here. This is your business. This is like, yeah, does my company buy this, sell this, how do we approach this in the market type deal. Think of yourself as a manufacturer of goods or something like that. You need to make a business decision. So what do you think would be a good risk-reward calculation? If you were going to risk, let's say 20 pips of risk, i.e. my stop from my entry, here's my entry here, let's say, and let's say that's my stop loss up here, and it equals 20 pips. How many pips do you think you'd want to make it a worthwhile? 2 to 1? I'm more in the 2.5 to 3 to 1. Yeah, if I'm going to bank 20, I'm going to make 50 to 60 and I'll be happy. Okay? And it makes it worthwhile, right? It's going to make it a little bit hopefully a little bit more worth your while. Now, if you do that calculation, it should start keeping a lot of people out of stupid trades. Because what you're going to have sometimes is, a lot of you are very good at picking direction, and you're very good at picking areas of support and resistance. But if you have something like this where price has been trending down, okay, on a 4-hour chart, and then down here in yellow, it's found a nice little bottom. So, shorter term price changes, and you decide that you're going to long this. Okay, what it's going to do, if you do a decent risk-reward calculation, it's actually going to keep you out of a lot of these counter-trend type trades, because that ratio in here, in this area of where the next area of where it's going to, the X area of resistance, is not going to be good enough, because you're going to have to risk, say, 20 or 30 pips down here for a stop loss. And if you cannot see clearly where that's going to make you the money by trading, you're going to walk away from the trade and not have it. Okay. Likewise, if you're shorting into like a daily extreme pivot or daily central pivot or weekly central, you can't short into a weekly central pivot 15 pips from the central, if that's probably going to be an area where it's going to reverse. Don't go putting 20 pips of risk on a 15 pip trade. This doesn't make business sense, right? Okay. So, if you cannot, when you're doing your trade planning, if you cannot come up with an entry exit, where am I getting in and where am I getting out, or a risk reward calculation that makes probably for, I think, a novice trader 3-to-1, you have no trade plan, which means, well, there's no trade. Simple in my mind, but for many of you are probably sitting there going, G'day Tobias, how you doing? No trade, are you joking me? I have to be in a trade all the time, right? Well, actually, you don't. So, it's quite simple. No trade plan, no trade. No. No, I don't, George. Well, no, I don't, because I find I have enough time, I spend enough time in front of my computer to get into trades. But if I didn't, if I had to go to a full-time office job or something, I would probably make a strategy or a trading system that included pending orders. But then I would probably, where are we? Here. If I had to use pending orders, that's where I'd probably bring in something like this to manage them. Like, once it gets into a trade while you're sleeping or something, or you're at the office, it will automatically move a stop to break even and do various other things that you might want. Instead of, oh, I wonder what that trade's doing right now, and you're sitting there worried. FX, if it's hard to sit there and do nothing for a newbie, you need to find something else to do. I was mentoring somebody not so long ago. He was a massive over trader. No, I don't, Boyke. Massive over trader, right? Like, the reason why he came to be mentored from me was it's high or low for me, Lee, above a 15-minute change of trend, or below a 15-minute change of trend. I'll give some examples shortly. So this guy came and mentored me, or came to me for some mentoring. I mentored him every day for a month. So I'm talking about it now, FX. 20 days I mentored this guy, massive over trader. Okay. basically sat there every day. He definitely knew analysis, but spent most of his time, because he thinks he's got to be in a trade all the time, because that's his job, right? I'm a trader, so if I'm not in a trade, I'm not working. I'm guilty, because in my old office job, I was a computer programmer. I'm always programming, or I was an accountant. I'm always in a spreadsheet. I'm always working, right? I'm always doing something. How can a trader, as a trader, how can I sit there and not be in something? Trading is actually like 90%, 95% you are in nothing. It's the nature of the beast, right? Do not go and manufacture a trade out of nothing. Trading, it's quite simple. Price falls into your trap, or there's no trade. You need to find something else to do. Okay, so when I'm trading personally in New York or something like that, I sit down and I do my analysis, right? So I sit there and I go, what's driving these markets? It's technicals, good. Where do I see the next buying or selling opportunities in New York? New York's opening shortly. Are we at support or resistance of decent levels anywhere? Yes, we are here. Okay. That looks like this 15-minute change of trend is going to take about another hour to happen, or another 2 hours. So, you know what? I'm going to go and do something else, and then I'm going to come back and look at this. Or sometimes I'll be trading Asia, and I'll just put alarms on GFT in places and say, well, that's where you've got to come back to for me to trade you, so I'll just now go and do some exercise, or spend time with my family, or water the garden, or go have a life. I go through about 8 to 10 a day before I probably find something FX. I don't go crazy, because you'll just forget. So what you need to do, FX, is if you're sitting there and you say it's hard for a sit and do nothing as a newbie, you need to actually get up and go bake a cake or something. You actually need to go and do something else. So going back to the guy I was mentoring, his big problem is over trading, right? I'm like, dude, you need to stop trading. Take your hands off the damn mouse. Well, I can't. I'm like, well, you need to go, what do you like to do outside of sitting in front of a computer? Do you like to read books? Yeah, I like to read magazines. Okay, well, go read a magazine. Well, I'll probably read it in front of my computer. I'm like, well, pick up the magazine and go down to your local cafe and have a coffee and read it. No, I don't like to leave the house. Okay, well, go and vacuum the house then. I'm not really, that's my wife's job. Oh, go and do the garden outside. Wash the car. Do something. Oh, I don't know. It's like, dude, if you're going to make it as a trader, you got to take your hand away from the mouse. If there's no trade, there's no trade. Don't sit there for 7 hours, not be in anything, and then decide you better get in something. Because then you just end up taking a loss, and that's really frustrating. Work on a strategy. Backtest stuff. Do something. Thanks, Joshy. I'll probably, we'll see what happens with it as time goes by here. Okay. So it's very important, guys, you need to have a plan. If you can't, and this is the most important component, right? These two here. We are all very good at entering something. If I was sitting in a big giant classroom with everyone in this room right now, and you're all trading, and I was just walking observing, all of you would have absolutely no problems entering a trade. If I then walked up to you and said, hey, okay, good looking entry there, Boyke. Where's your exit? Most of you would have to think about it by looking at your charts, when you should have actually just be able to turn around and go, oh yeah, it's at the 1382 extension of the fib here, which is also the daily extreme pivot. No one would be able to tell me that in advance. It's actually the most important point, is where are you getting out of this thing? And it's something I say in my Asia Bootcamp class when I'm coaching. Someone says, oh, where do you see the Aussie going? And I know they've taken the trade. I'm like, so you've taken it, haven't you? And they go, yeah. I'm like, and you don't know where you're getting out, do you? No. Get on the ground and give me some press-ups, man. You have to know where you're getting out of that thing. It needs to be a forceful habit. If you cannot tell where you're getting out, how can you tell whether you're shorting into longer term levels of support or resistance? If trending Boyke, like if this was a 4-hour swing or something like this here, and you entered here at like a 50%, okay, higher highs would be a good start. Otherwise, maybe like a daily extreme pivot or, something. Then this one's been recorded, yes. Okay? What I like to do is once price would break my higher high, I like to trail my stop. Sorry, up here. I'll trail the stop tight because it's it's getting closer and closer to that point where prices go, hello, big fat pullback again, and maybe some continuation. So, I'll trail some stuff, but I will have a plan in advance of where I know where it's going, and I would have done a calculation. See, the way my system generally trades is I'm always going to take something in like a 4-hour swing at least, right? So I'm always going to take a 15-minute change of trend down here, and I'm always going to be risking in between, like maximum probably like, on average, I would say between 15 and 20 pips, but maximum 30. And if it's more than that, I'm probably going to, I'll have to lower lot size and stuff, but then I'm going to be like, not feeling so good about it. So if I'm risking, say, 20 pips here, this distance up to here, let me draw it in, blue. This distance here is always going to be like 60 pips. It depends, PJ. If it's rocking and rolling, like I'll trail the 4-hour 5 or a 15-minute 21 or something, and I'll do it with like, like let's say if it's got this Aussie here. See, if I was trailing this Aussie, if I was in this, let's say I'd got in this trade now, earlier today, somehow, let's say I got in on this deeper pullback here. Now that it's making lower lows, I would probably be looking at it saying, well, look what it's been doing. I'd try to be trailing the 21, just above the 21 there as much as possible. But 10 pips above a 21 EMA or something. But you know what? If it gets real close to where I think it's going to get knocked out, I'll trail a 5 EMA or something. And try and get lucky with that, right? Well, if I'm spot trading and I think it's going to reach my target and reverse scope, I'll do it straight on a 15-minute chart. Here's the interest rate decision. So they leave it as unchanged now, or it's the important parts, the meeting bits. Yeah, it's the next bit. I knew that was going to happen. That was obvious. But it's what they're going to say is going to determine where we're going to head off here. We'll let that go off and do its thing for a minute here. We'll talk about some... Okay, so yeah, trade planning, it's very important, guys. that you can come up with this stuff, right? An entry, which is the easy part for you, but the exit is hard. And that links back to your analysis, right? So they all link together. If you're sitting there today going, okay, I've got to follow what this genius is trying to tell me. Well, this is where I think we're going to get in, but I have no idea where I need to get out. What does that tell you? If you are looking at a chart and you go, well, that's where I'm going to get in, but I have no idea where I'm going to get out, what's it telling you? No understanding of what, George? You've got no plan, right? If you have no exit, you have no plan. But what does that tell you? If you're someone who's sitting there right now out of all these people in the room, 86 people, and you go, okay, I know where I can enter, but I have no idea where to exit. What does that tell you that you need to work on? But then the next day you sit down and you're like, good God, I still have no idea where to get out of these things. Right. Your analysis is rubbish. You need to go back. Yeah, if you cannot, analysis is like, yeah, analysis is not just, oh, where are we now? Oh, yeah, that's where I'm going to enter the trade. Analysis is, where are we going here? Okay, check this out. This is how I I say these things because they're huge turning moments in my personal trading, right? Because you realize that you're useless at analysis because you cannot determine where we're going. So, it's up to you, yeah, it's sort of up to yourself, PJ, and how you devise it, right? So this is how I would do things. So, I'm a big price action fan, right? Personally, price action, the fractal nature of the market is the cornerstone of how I trade. Always have been and always will be. Okay, so this chart trending down, pullback, boom, boom. What does that tell you? What's happening here? Right, it's a change of trend. So what would we like to see? Well, how about a pullback and a long, right? So pull back to some support and then we'll long you. Okay, so good. Now, most of you will be very good at finding areas to enter, but to get out will be a totally different story. So what happens is we come back to, we change trend, we pull back to pretty much a 382 50% zone of the little rise after the break, and looks like we're changing trend and heading onwards. Okay, so when you go down to maybe shorter term time frames and you start looking at this stuff, you can determine where you might get in, where you might try and get out. So based on what you see here, where would be a good entry? And if you're in my Asia class today, do not say a word. Pull back to where though, Jeremy? If you were sitting down as a trader right now and I said, and you're doing analysis, fib of what, Ron? Maybe we'll fib the rise so far, something like this? Something down here? Something in here somewhere. The 21 EMA I like. Okay, somewhere in there. Okay, so you've entered that. Good. So, nice. Most of you will look at that and go, 50 pips down the road. If I can get down there, 50 pips, change trend, CAD, you're mine. You're mine. I'm going to own you for the next week. Maybe. So, what most of you do is you'll line that up. Very good. You learn some basics of support and resistance, fib of the rise. Yeehaw, off we go. Give me a change of trend along you. But honestly, who thinks about where they're actually going to get out of it? Well, it depends, PJ. Where are you getting out of it? So a 50% fib extension is what? Going to take us to about here? Something like this? So you'll be looking for maybe a change of trend in here with a lower low stop. Off you go. Does that seem feasible? No, it's just based on pure Fibonacci numbers league calculations, so that's where it would project it to, somewhere in here. An entry in here, well, an entry in here will actually take you up into this zone up here, is what it's saying. But PJ, I'm not looking to short long at resistance, am I? PJ raises an interesting point. We've got lots of resistance at these levels. Yes, that's exactly what I need, right? Because I need a pullback. So I need resistance to hold, because this is what's going to happen, right? Is the CAD is longable from on a pullback. Which, I mean, if you agree or disagree, I think it's longable here. Because, right? Now, why would I say that? Well, we're going to go to our 50,000 foot view, right? Is price all got, these major swings over here in yellow all got broken by these major swings over here. And this at 97.50 has gotten long at like a, 50% fib of that entire rise. So this thing in the 50,000 foot view is starting to look bullish. So we want to find areas of support to trade plan off. I actually wanted to create a trade plan. So, as per the analysis here, by resistance levels, I'm saying you think, PJ, what I'm highlighting in yellow. Right? Okay, fair enough. So it's resistance. Good. So, where are the two long? I see two potential longs on this chart. I'll give you one. How about that? Back to support versus, we're currently in resistance. So yes, if you think we're at resistance, like PJ says, look at the resistance there. That's valid analysis, right? So what could you be doing there? If you believe it's coming down, yes, Lee, if you think you're coming down, you could be trade planning there, couldn't you? An entry and looking for an exit somewhere and all that sort of stuff. Yes? I don't see why not. But I'm looking to plan to long way down here somewhere at support, right? So maybe like a New York trade later on, something like that. Okay? Where's another long here? Right. right, this one here is the next one, is what if it just shoots up? Well, it's going to break all that stuff that PJ highlights, and so then we can maybe take that and long that. There, see? So that's, okay, and that's why, as a trade plan for me, is if I was going to long that down here, my trade plan, once we'd broken this area, I'd be tightening my stop a little bit, right? Because I'd be planning exactly what we just spoke about, where it's going to come up here and go, hello, boom, boom. So what I'd like to do is get out as close to my little top area as possible, okay, and then build a new trade plan. So like entry number 1 might be here, and the exit, which will be, I'll call number 1B up here, and then maybe trade number 2 the next day or a couple of days later up here, and then once that makes new highs, look to get out at level 2B or something. Okay, that's why my exit's going to be, like a fib extension I think would be a smart play, because that's how this could play out, is where we pull back, we go up, we pull back, we go up, okay? I'd wait for like a 15-minute change of trend confirmation and put it below the 15-minute swing, PJ. I'll show you in a minute. Okay, so if I was going to trade from this vicinity, and I was going to look for something like the fib extension, that's 200 pips away. And if I'm going to risk probably 20 pips to get into this thing, the risk reward is perfect. It's like really good. Yeah, you don't have to get too creative, Jeremy. Seriously. Okay, so here's the fib on a 15-minute chart, okay? Here's that whole move on the 15-minute chart that I had on the 4-hour. Right? So what I'll be looking for, guys, is this is my zone down here. Okay, so I'd like to see the 15-minute trending down, like a nice downtrend, and then I want to see something that's going to signify that it's going to find another level of buying, like a change of trend. So we're going to find a little bottom, it's going to pull back, maybe fail to break new lows, and then price is going to go and break the previous swing high. And then I'm going to look for that, hello, pull back long, and then let me draw it in red, stop loss, going to go below that little swing area there, and then off we go. Tomorrow, guys, we'll pick this up, we'll wrap things up here. Tomorrow we'll pick up with a little more trade planning and stuff, and then we'll move on to the actual execution and management. So it'll be a little bit more than 15-minute changes of trend and how you can manage some stuff. Now this part of the old engine room here, okay, I'll pass on some tips and tricks in here that have taken years for me to understand and find out, okay, and a lot of it builds into psychology and stuff, and so you guys will definitely learn some stuff. So number 1 could be 3 to like New York, or like between London and New York, PJ, and then plan the next plan. Actually plan that out like a day or two away down the road. Yes, that's what I'm like all the time. I'll tell my class that we'll long back off this area if it gets down there this week, and then you go there and it's all. You do it, right? Okay, guys, have yourselves a good rest of your day, and we'll talk to you tomorrow for a little bit of, we'll carry on a little bit of trade planning, and we'll pick up execution and management. Okay? Have a good one. We'll see you then. Cheers.